Then, most importantly, for the accounting equation question, as I told you before, right? As I told you before, accounting equation will be amalgamated with some other lessons. So probably in your exam also, it would be amalgamated with bank reconciliation, right? It could be amalgamated with the bank reconciliation, or could be amalgamated with error corrections, right? Once we are doing the paper discussion, paper class, so we can go through with how it, for the further questions, how this has been tested in different areas, right? So now, today I'll be starting with you all another session, another topic, which is called as bank reconciliation. Bank reconciliation, right? So now, bank reconciliation. So before we go for the bank reconciliation, keep it in mind, we can keep the cash. So now we are having an account called cash account. I think everyone who is in this session is aware about debit and credit, right? So there was only one student who was not aware about debit and credit. I asked him also to go through with that free session for double entry system, which was already uploaded for onlineaccounting.in, right? So now, good morning everyone. Okay, right? So now, what I want to tell you is, this is your cash account. This is your cash account. This is a cash ledger account. This side you all know it's debit. Then the other side is a credit, right? Then uh, here, this is the cash account. So most importantly, keep it in mind, we just keep the cash in our bank current account. So now, if you are thinking, so there could be cash and bank account, two different accounts. For physical cash balance, one account. So the cash in bank, it's another account which is called as bank account. Just come out from that picture that you would have learned in O levels or might be learned somewhere else. So now, how it goes up is, now it says, for the purpose of taking the transactions using the cash, they are using just a bank current account. So all the transactions would be happen to a current account. All the transactions would be happen to a current account. So in that current account, all the transactions would be represented from which account? From the cash. All the transactions would be recorded through the cash account. Clear? So cash account means it shows all the transactions relevant for your current account. So because some students have learned that, okay, there is something called bank account. No, there is nothing called bank account now under your syllabus. So it's only the cash account and the petty cash account. It's only the cash account and the petty cash account. Right? Cash account, it's a what? Showing the transaction relevant for current account. That means you deposit the cash in a bank account. We believe all the transactions now happen through the checks. Clear? We believe that all the transactions will happen through the checks. So therefore, all the transactions relevant for check would be appearing in cash account. Clear? So for us, cash account, it's a what type of account? Cash account, it's a asset account. Cash account, it's an asset account. Because cash is asset, we all know in accounting equation, cash is an asset. Right? So now, this is a cash account, which shows the principle of assets. Clear? So now, you all know assets, if it is increase, it should be debit. If it is asset increase, it should be debit. If it is asset decrease, it should be what? It should be credit. Clear? If it is asset increase, it should be debit. If it is asset decrease, it should be credit. Clear? So now we'll say you You receive a check for sales, right? We'll say sales value rupees 50,000. That means you receive a check for rupees 50,000. Clear? Then what's the double entry? Sales value 50,000. You received a check. Whether you received a check or whether you received the physically cash, what's the double entry? Cash account debit. Then your sales account would be credited. Sales account would be credited. Right? This is what we record in our ledger accounts. That means in the business, this is what we record. Cash account debit and sales account credit. Here, cash account debit and sales account should be credited. Then the next thing is, right, these same transactions, this is account is prepared by whom basically? Ledger account is prepared by the business. Ledger account is prepared by the business. But the same transactions would be recorded by whom? Same transactions would be recorded by the bank. Bank will be recorded this through the bank statement. This is the conclusion. Transactions will be recorded by two parts. One is by the business. One is by the business. The other one is by the bank. That means same set of transactions. If we receive a check, we have to deposit it in our bank account. In our bank, we have to deposit it. So we are supposed to record it. Since we deposit it in the bank, since we deposit this in the bank also supposed to record our transactions. Clear? Because they are responsible for whatever we deposit. Clear? So this is the point. Same transactions, not something else. Same transactions would be recorded by the business through the what? Through the ledger account. Through the ledger. Then same transactions would be recorded by bank, but bank is preparing for that part. Bank statement. We are using the bank statement. Clear? Then this is ledger account is cash account and it uses the principle of assets. We will say for the preparation of cash account, we use the asset principle. But for the preparation of bank statements, we use what? Liability. I will explain this. So now this is the thing. We record our transactions in our ledger. We record the transactions in our ledger. Right? But the same transactions would be recorded by bank through the bank statement. For us, if we deposit the cash, it's a what? Asset increase, it's debit. It's asset increase, debit. Clear? So, if we receive a check of rupees 50,000, it is clear. If we receive check of rupees 50,000, we get the cash. So, we get that check for our current account. That means our cash is increased. Cash increase means asset increase is debited. So, cash account should be debited how much? 50,000. Cash account should be debited 50,000. Clear? Then from our perspective, that means from the business, the point of view, this is the asset increase. Clear? This is the asset increase and this is debit. Because this is, once we receive the cash, it's an asset increase for us. So if it is asset increase, it's debit. This is what business recorded. This is what business record. Right? This is what business record. Yeah, probably Kamosh. Right. So this is prepared by the business. So for the business perspective, this is asset increase or debit. But see, business recorded is 50,000. Doesn't matter, correct? They have recorded into the cash account. But the same transaction should be recorded by who? Bank. Because they should have your account details. We'll say you are experiencing. So experiencing, they're supposed to keep a bank statement. And they will record the transaction in the bank statement. So debit, credit, and debit. Clear? So now, how the bank statement they are going to record this? From the business point of view, this is a what? Asset. Cash is asset for the business. Once they receive from the check or something else, once if you receive the cash, it's a cash increase. It's a cash increase. Right? So then, here, from the bank perspective, once you deposit the cash, clear? Once you deposit the cash, right? Once you deposit the cash for the bank, now once you deposit it for the bank gets a what? Once you deposit the cash for the bank gets a liability. Clear? Because once you deposit, bank supposed to do the repayment. Clear? Once you receive the cash for the business, it's asset. For the business, it's asset. Doesn't matter. It's asset for the business. But for the bank, it's a what? It's a liability. For the bank, this is a liability. Right? Because once you deposit 50,000 in the bank supposed to, whenever you requested that, whenever you said that you want to withdraw that 50,000, bank supposed to return it back. Since bank supposed to return it back, from the bank perspective, this is a what? This is a liability. Right? So you all know what's the treatment for liability? Liability increases credit. Decreases debit. That's how the liability principle goes. Once you deposit 50,000 for bank account, once you deposit 50,000 for the bank account, from the bank perspective, it's a liability for them. Once you deposit the cash, it's a liability comes for the bank because they're supposed to secure it and give it back for you whenever you are. So bank statement, see, for the bank side, this is a liability. Once you deposit, their liability increase. So liability increase means credit. How much? 50,000. We'll take 10. Clear? So that's the first transaction, right? Then that means you can see from the business perspective, if you deposit the cash, it's debited for cash account, but bank statement is credited. Identify the reason behind this. Because from the bank perspective, from the business perspective, cash account is a what? Asset for them. So asset increase debit. But from the point of the bank, this is a liability. So liability increases credit. So for us, it's an asset, but for the bank, once we deposit, it's not an asset for them. There is a liability for them. Clear? So liability increase credit. So now obviously the balance would be how much? Rupees. Clear? So we'll say another check you received for sales, 100,000. So cash debit, sales credit. That's entry. Once you receive the check, once you receive the cash, your cash account should be debited because it's an asset you get. Cash means asset. So asset increase debit. Asset increase debit. So it was debited for the cash account. Right? It was debited for the cash account. Then cash debit. Then after that, your sales should be credited. Your sales should be credited. Right? Sales should be credited. Then, now you can see this is how the business recorded the transaction. This is how the business recorded the transaction. Right? This is how the business recorded this transaction. Right? We debited the cash account. That's how we recorded it in the business ledger account, cash debit. But now you deposit this check in the bank. We'll say now your bank is Kiribathgoda HNB Bank. So the branch manager is Kanchana. You go and ask her to get a deposit. Once her get this 100,000 check, the bank liability would be increased. Why? Once you deposit 100,000, it says you supposed to what? You're supposed to secure that 100,000 till the organization asks for the withdrawal. Clear? Once you deposit for the business, it's an asset increase. But once you deposit, the check comes for the bank, it's a liability for the bank. Because once you deposit, bank supposed to keep it secure and give it back for you once you ask him for the withdrawal. Clear? So again, asset increase debit, but for the bank, it's another liability because now they have to keep another 100,000. So total balance is how much? 150,000. Clear? So for us, it's asset increase, but for them, it's liability increase credit. So cash account gets debited, same transactions would be credited for bank statement. Right? So that's how it comes. We will say now we are going to issue a check for electricity bill. Now we are going to issue a check for the electricity bill. We will say rupees 10,000. We will say rupees 10,000 is the electricity bill. Right? So once you issue a check for electricity, we will say 10,000. So this 10,000 transaction should be recorded by both parties. Huh? This should be recorded by the business as well as the bank. This will be recorded by the business as well as the bank. Clear? So now, right. So this will be recorded in business as well as the bank, electricity bill payment. Now just think what would be the entries to pass in the both the places. Now, from the business perspective, be careful. Once you pay a check, that means once you issue a check, your cash balance decreases. So, see, from the business perspective, cash is asset. So, cash decrease means asset decrease credit how much? 10,000 electricity. So, then electricity account should be debited. That's how we record in business the ledger account. Cash should be credited. That's how we record in ledger account in business. But now, be careful, our assets decrease. Yes, of course, correct. Now you issue this check. Now this check comes for the bank because the person who got the check, they can't keep it with them. To get it the cash, they're supposed to go for the bank. Then electricity bill comes for the bank. Electricity bill comes for the bank. Now, once the electricity bill comes for the bank, bank liability would be what? Not increase, because now you keep on behalf of the organization 150,000. Now the organization asks you to pay 10,000 for electricity. Now the organization asks you to pay the electricity rupees 10,000. So now you had 150,000 with the bank. So now the branch manager had 150,000 in bank for your account. Now you say, branch manager, Kanchana, look here, can you pay 10,000 on behalf of us? So Kanchana is more happy. Why? Now out of that, they're supposed to pay 10,000. So So that means liability is what? Decrease. Debit. How much? 10,000. Liability decrease. Debit 10,000. See, once you pay your cash decrease, that means asset decrease for the business, but for the bank, it's a liability decrease because now they don't want to keep 150,000. They have paid 10,000. Now they're supposed to keep only how much? 140. Clear? We'll say another, we are going to pay the telephone. So business cash account should be credited. Because once you pay from a check, your cash decrease. That means asset decrease. We'll say 20,000. But from the business perspective, this is a cash decrease. But from the point of company, company is cash decrease, but for the point of bank, see, this is a what? Liability. Now the bank liability is 140,000. Bank liability is 140,000. Once they had the 140,000 liability, luckily the XPLC gives them order, look here Kanchana, can you pay another 20,000? So Kanchana would be more happy because out of this 140,000 they are supposed to eliminate another 20,000. So then this is how much? 100. Clear? So simply this is the thing that we are supposed to do in here. This is the impact. This is the final conclusion. Seems like a express program. We should get the conclusion soon as possible. If the cash account get debited, right? Then the cash account debit, bank statement should be what? Credit. That's the ultimate conclusion. If the cash account debited, that means asset increase for us. But for the bank, once you deposit it, it's a liability increase. Liability increase means it's credit. So cash account debit, bank statement credit. So this is the first thing. Then the second one is if the cash account means cash control account. Now we say it's a control account. Cash control account credit, then the bank statement should be debit. Clear? You're supposed to identify the reason also. This is why it's debited is, this is asset increase. Then this is liability increase. This is liability increase. Clear? Then cash control account credit means asset decrease. Then this is why it's debited is bank statement because it's a liability decrease. Liability decrease is debit. Keep in mind cash always is asset. Bank statement is always a what? Liability for you. Right? So you just put the heading bank reconciliation and put conclusion or we'll say summary. Make it as summary. Right? And take down this first one, cash account debited, bank statement. If the cash control account, second one is cash control account credit, bank statement debit. So the opposite way that they record. Business record cash debit, but bank record bank statement credit. The opposite way that they are going to use it because they use two opposite concepts. For us, this is asset. For the bank, this is the liability. Clear? Any questions? Let me know if you didn't understood that. Take down this page, summary, and take it up. That. Then after that, take down these two also. Now we balance out the cash account. How much is the cash account balance? 150,000. This is how much? 150,000. Then this is 120,000. This is B. How you balance out the account? You take the higher value for the both sides. You take the higher value for the both sides. Here it's 150,000. You take that higher value for this side also. Then you subtract this. Then this is 120,000. Now see, your closing balance is how much? 120,000. See, your balance is 120,000 cash account. Then bank statement balance also how much? 120,000. Because you recorded the same transactions using different principles, but you have to take the same amount, right? First, take down this summary and take down this example. Say example 1 and take it down to Ikmata. Once you're done, just put a message. So if you have any questions, please ask. Right, so this is the cash account. So you balance off this. Here, no need to balance it off because we have in a column called balance. So this is the what? Which balance? This is the credit balance. See, credit has a higher value, but this is a debit balance. Take it down. Yeah. Cash control and cash account both same. Just put cash control account. We say it's cash control account. Huh? Just put cash control account. Huh? Shall I erase it? If not, just tell me. I would have keep it for another 2 minutes. If you have any questions, just ask and clarify and go. Huh? Right. Now, we all know if our cash control account balance If our cash control account balance is 100,000, our cash control account balance is 100,000, right? If our cash control account balance is 100,000, our bank statement balance also should be how much? 100,000. So we say it's 100,000 the opening balance, then bank statement. Now look here, don't be panic, just keep it simple, right? So I told you we use some opposite concepts. If the cash is having a debit balance, bank statement should have a what? Credit balance of how much? Rupees 100,000. So the balance is in credit. So you're having a credit balance. So obviously that's what's supposed to happen, right? Because we have already discussed few minutes back. If the cash is debited, bank statement should be credit. So if the cash account balance is debit balance, bank statement should have a credit balance because we use asset, they use liability. We are having asset, but for the bank perspective, point of bank, they are having a liability. That's all. Clear? Then the next most important thing is this is debit and bank statement credit. Now cash control account is there, bank statement is there. But our today's lesson is not none of them. Today's lesson is all about bank reconciliation. Today's lesson is about the bank reconciliation. Now your question should be, so look here, you said cash control account, bank statement is there, but our topic is bank reconciliation. At what time, then how it comes to bank reconciliation topic? So now the question comes like this. This is the opening balance. That means 1st of January you had 100,000 balance. See, you had 100,000 balance on 1st of January. Then in this 100,000 balance, it's 1st of January, right? Just give me a second. Yeah, give me a second. Right. So now, what I told for you guys is, now look here, we'll say you receive a check on January 30th, amount is 50,000 for sale. You received this check on January 30th, it's sale. Rupees 50,000 the check. This is January 31st. Around 4 o'clock, you have received this check. January 31st, around 4 o'clock, 4 p.m. that you have received this check, 50,000. Now, January 31st is the last date of the month. Then the time is 4 o'clock. I don't know whether you're aware or not, 99% banks are closed at 3 o'clock. 99% banks, it's closed at 3 o'clock. So now you receive this check at 4 o'clock. Now on 31st, even you receive the check, can you send it for the bank to get deposit? Right? So now you have received the check of rupees 50,000 on March 31st around 4 o'clock. Then you take the, because you are open until 6 o'clock, your office is open until 6 o'clock. You collect any kind of a check until 6 o'clock. Even if someone came around 10 o'clock at the midnight, you will go and collect the check. That's a check, no? But bank is closed at 3 o'clock. So you can't go and deposit this 50,000 check on 31st. Clear? That means on 31st, even you received the check, that check would not be gone for bank. That check would not be gone for the bank. Clear? That check would not be gone for the bank. Because March 31st, 3 o'clock, the bank operations, they have already closed. You have received the check for 4 o'clock. You have collected the check, but unfortunately, not the bank. So March 31st, now you balance off the ledger accounts. Now see, cash control account. If you balance off the cash control account, how much is the balance would be there? Here 150,000. Here also it's 150,000. Then here balance carried down, it's how much? 150,000. Here the balance brought forward 100. Clear? But now look here, March 31st, the bank statement balance is how much? 100,000. Right? Any questions? Please let me know. Now look here, March 31st, you receive the check. So you have collected it and kept it in your wherever. In your locker that you have kept it that 50,000 check. But the concern is now, bank is closed on 31st March around 4 o'clock. So you don't have that chance of depositing that check into the bank. So bank is not aware that you have received a check around 4 o'clock because bank is already closed and branch manager at 4 o'clock already slept in somewhere the bank. Right? So now March 31st, you balance off the account. 100, it says in your bank account, there should be 150,000. Then after that, bank send you an email saying that we have only 100,000 with the bank for yourself. Now you can see, you say there should be 150,000 in bank. You say there should be 150,000 in bank. Right? You say there should be 150,000 in bank. But bank, it says, this one says there should be 150,000. Look here, our cash account says 150,000. But bank says, look here, we don't care what you is there. We have only 100,000 physically in our bank for you. Now you can see, you said in your bank there is 150,000. But bank said, look here, the bank said they have got only 100,000 in the bank. So now you can see there is a difference between the cash control account balance and the bank statement. Here, there is a difference between the cash control account balance and the bank statement balance. There is a difference between cash control account balance and the bank statement balance. Clear? So now, because cash control account it says, cash control account it says 150,000. But the bank statement it says just 100,000. Now you can see there is a difference. Once there is a difference between the cash control account balance and the bank statement balance, then it would be the next step comes, which is called as bank reconciliation. Keep it in mind, not only bank reconciliation, even you can prepare inventory reconciliation. In the February 1st week, we are going to prepare debtors reconciliation, creditors reconciliation. Just take it for your mind. At what time you take the inventory reconciliation, or the debtors reconciliation, or creditors reconciliation, or in this lesson, bank reconciliation, at what time it comes is once you have a difference between the cash control account balance and the bank statement balance. Once you're having a difference between the cash control account balance and the bank statement balance, then it comes the statement which is called as bank reconciliation. I think now it's very clear at what time you prepare the reconciliation. If there is any difference, then it should be the reconciliation. Clear? So now you know if there is any difference, there should be the reconciliation. Now, first thing is in a question, guys, you have to identify what are the reasons for difference. As an example, we'll say, sometimes you would say, look here, our cash control account balance. Cash control account balance is 50,000. Cash control account balance is 50,000. So cash control account is prepared by who? This is prepared by the business. This is prepared by the business, right? Then bank statement. The same transactions would be recorded by bank statement. Bank statement prepared by whom? Bank. Because they also should aware how much is there on behalf of you. As an example, otherwise, if they didn't record a bank statement, if they didn't record it in a bank statement, if you have deposited 100,000, you deposit 100,000, then you know our people know, even you have deposited 100,000, you would ask from the bank, look here, I deposited 150,000, give me the 150,000. Even you deposit 100,000, you would ask 150,000 from them, right? Then bank can't give the 150,000 because you deposit only 100,000. So therefore, bank supposed to keep the record. Bank supposed to keep the records of your account. Bank supposed to know how much is available balance for you. Clear? So therefore, bank also record the same transactions using something called bank statement. Using something called bank statement. Then bank statement amount might be appearing at 75,000. Look here. You say, look here, in our bank account there should be 50,000. Then bank says, no, not 50,000, it's only 20,000. Now you will be wondering, so look here, how these two amounts can be a different amount. Here you would have a different amounts to it. That means cash control account balance is 50,000, but bank statement balance is 20,000. Cash control account balance 50,000, bank statement balance is 20,000. Clear? Could be happen. Once there is a difference, because now we say there is only 50,000. Now we say there is only 50,000. Then we say in bank statement there will be only 20,000. Bank confirm, look here, not 50,000. They send an email basically, or they post it. Basically nowadays it's email. They email it and they look here, there is only 20,000 available. So in the question, very first thing is, you have to identify how this difference comes. Clear? So we have to identify the reasons for difference between cash control account balance and bank statement balance. You have to identify what are the reasons for this difference. Clear? You have to identify what are the reasons for this difference. Because now there is a difference. Basically, this difference comes because of two reasons. This difference comes because of two reasons. Right? One is, this difference comes in our cash control account. If we have done any mistake, that means instead of 75,000 in cash control account, this is the correct balance, but we would have recorded like 750. So the cash control account, they have done some errors. So that would be a reason for that difference. That means this difference comes, 50,000 and 20,000 difference comes because of errors. So one part you could do the errors is errors make as, so we say errors in cash control. Errors in cash control. This comes because of errors in cash control account. Then the other one is errors in what? Bank statement. Errors in bank statement. One is errors in cash control account. Right? That difference comes, cash control account could be done any errors. The difference comes because bank statement would have done errors. That means bank has done errors. You can't guarantee the bank people. They would have also done mistakes. Right? So errors comes because of two reasons. One is errors in cash control. Then the other one is comes because of errors in bank statement. Because of errors in bank statement. Right? So now one is errors in cash control account, the other one errors in bank statement. You have to identify what are the errors in cash control account. Look here. In here, error was if someone, as an example, will say cash control account haven't recorded something, then that's an error in cash control. We'll say bank statement have not been recorded something, that's an error in bank statement. Clear? So, who has not recorded something, that's the error for them. Here we'll say one check have not been recorded in bank statement. That means it's error in bank statement. We'll say bank charges have not been recorded in cash control account. Not recorded by cash control account, then it's an error in cash control account. Who has not been recorded, the transaction should get the fault. Clear? Who has not recorded the transaction should get the error. So it's so simple way that we have to identify the error is for in cash control account, or either the error is in the bank statement. If something has not been recorded by bank statement, then it's an error in bank statement. Something have not been recorded in cash control, that's an error in cash control. Clear? Who has not been recorded, all should go for them. Clear? So now, errors in cash control account. First we'll move for this. That means what they might miss it. As an example. This is my cash control account. Balance is 100,000. Clear? Then the bank statement is 100,000. It's 100. So it is 100. Clear? So now, this is the bank statement now. This is the bank. This is cash control account, this is the bank. Right? Now, this is the point. Bank provide different services for you. So, this is being recorded for a current account. Any questions with your screens? Is it because of me? No, right? You all can see the screen, right? Yes, you all can see the screen, right? The whiteboard. It's clear, right? Then you might have a connection issue, I guess. Right. Okay, thank you. So now, what I was telling you is, this is about the current account. Current account, you all know in business studies or economics you have done. You do the transaction through the check. So because of the services that they provided, they charge some amount that is called as bank charge. So bank charge some amount for the services that they provide, which is called as bank charges, right? So the amount that they charge is bank charges to the service that they provide. So they don't come to a conclusion that, okay, before they charge the bank charges, they would call for us. No, they will never call for us. How many accounts are there for them? Can they call one by one and say, look here, we have charged the bank charges 250 rupees for everyone who is having an account in the bank? No, it's not practical. They can't talk for each and individual and say, look here, we are going to charge the bank charges. So they don't call and inform for the account holder that they are going to charge it, bank charge. But they charge it. That means without any prior approval, they charge it, bank charges. If they charge the bank charges, now this is bank statement prepared based on what? Liability principle of liability, right? Right? So bank charges is, look here, now we have 100,000 liability, bank having 100,000 liability. From this balance, they are going to deduct some amount as bank charges. So then liability decrease because they are going to charge, we'll say 5,000 rupees. So liability decrease. Liability decrease means debit. Now the balance is how much? 100,000 had. This here the debit means it's decreased because liability decreased debit. So here the balance should be how much? 95. But look here, at the end of the day, your cash control account balance is 100,000. Your cash control account balance is 100,000. 100,000. But the bank statement balance is 95,000. Clear? Now see, the reasons for this difference is what? This 5,000. This 5,000 is the difference. 5,000 is the difference. Clear? This 5,000 is the difference between these two. This is 100,000, this is 95,000. This is the difference, 5,000. How come this difference? Because bank statement recorded this, cash control account didn't record this. I said error goes for the person who have not recorded it. See, this was recorded by bank statement. So it's not an error in bank statement because they recorded. But this was not recorded by cash control account. So it's an error in cash control account. So it's what? Bank. Because they don't call and inform what 5,000 they have charged it. They just send this at the end of the month. After we receiving the bank statement only, we identify they have charged a bank charges of how much? 5. Clear? So until this bank statement comes, we are not aware about that. We are not aware about that. Clear? So one is bank charges. Then the other thing is standing orders. Errors in cash control account is standing orders. What it says from standing orders? You ask for the bank every month pay rupees 10,000 for electricity bill. That means 1st of January you send a letter for the bank. In this year, every month we don't send one by one letter. You send a one single letter requesting every month please transfer for electricity bill rupees 10,000. That means you don't want to pay monthly and go and give them the letter. Once you give us one single letter, once you give them a one single letter to transfer rupees 10,000 for electricity bill, transfer rupees 10,000 for electricity bill during the year, that means January they transfer 10,000 without any letter, February they transfer 10,000 for electricity, March they transfer 10,000 for electricity because the order that you have given is throughout this year transfer 10,000. Throughout this year transfer 10,000. Clear? But you don't want to give it monthly, just put a one letter saying that you're supposed to pay this every month. Clear? That's all. So this is called standing order. But then they record standing order 10,000. But we wait, but we don't record it. Even still, we have given the order, cash control account don't record that 10,000. Because we are not sure about these bank fellows. Because they are so such busy people. They so such busy people. So if they much busy, we can't sure they have deduction. So we don't record this standing order. We don't record this standing order until we don't record this standing order until what? Until we receive the bank statement. So until bank send us this document, we don't record this. Now bank has already charged the standing orders, but we don't charge it. Okay? But we don't charge it. Right? So because we are not sure about the bank fellows. They would have not deducted this. Even if you have sent a notice, they would have not deducted this. So once until we receive the bank statement, we don't record. But once you receive the bank statement, our balance is how much? Bank statement balance is 90,000, but our balance is 100,000. So there is an error. That error comes because of the standing order. So one is error in cash control account is standing order because bank has recorded this 10,000 standing order, but we haven't recorded. That's the one error. Then the other one is direct remittances. The other one is direct remittances. Direct remittances. Right? What do you mean by direct remittances? We'll say there is a debtor who is called as Sundari. She is so pretty, so beautiful. That's why the name is also looks like Sundari. So Sundari deposits. That debtor supposed to pay you 50,000. So debtor deposits you 50,000. Right? Debtor deposited 50,000. Now look here. Once debtor deposit 50,000 for your account, now debtor don't call you and say, she is surprising full. Sundari always gives you so many of surprises, including your birthday and all. This time Sundari gives you another surprise. Sundari didn't call for you, right? Sundari didn't call for you and inform for you, look here, I'm going to deposit you 50,000. But without informing for you, Sundari deposit it in your bank account. Now you doesn't know that, now you don't know that Sundari deposit 50,000. That's another sweet surprise from Sundari. You would never believe in that Sundari would have deposited 50,000 because Sundari is such a hectic debtor. You call for so many of times, Sundari, she's sometimes not answering, sometimes mobile is switched off. Even you have forget about that debtor's balance, but to surprise yourself, Sundari have deposited 50,000 in your current account. Once you deposit in the 50,000 in current account, once the Sundari deposit, bank's what? Once you deposit, bank's liability would be increased. Because why? Once the debtor deposit, even not you, even the debtor deposit 50,000. Even because of the debtor deposit 50,000. Right? Bank supposed to keep that 50,000 on behalf of you. Right? Because now the bank supposed to give the security for these 50,000 dollars. So this is a liability increase credit. So once you deposit, it's the liability increase, it's credit. Now the balance is 150,000. So at the end of the month, you get this bank statement balance. Now you receive this bank statement and the balance it says 150,000. Now the balance it says 150,000. Here bank it says 150,000. Bank it says 150,000. But your cash account balance is how much? 100,000. How come it? Because without informing for you, Sundari, that's such a nice girl, beautiful girl, that short hair girl, deposited 50,000 for your bank account. She didn't inform for you. Once you get the bank statement, now you are going through the bank statement and you identified, look here, there is 50,000 has deposited. Until bank inform for you that Sundari has deposited this 50,000, you will never record it in cash control account because Sundari didn't inform for you. You didn't record this. How you could record? You never know until the bank statement comes. Sundari has deposited 50,000 because it's a surprise for you. So you didn't record that amount which was deposited in the bank current account is direct remittance. Then the other one is dishonored checks. Dishonored checks. Right? Then any mathematical error would be there. Mathematical error would be there. So these are the errors in basically cash control account. Then that means these are the things not recorded by cash control account basically. That means error goes for the end party was not recorded. So cash control account have not been recorded this, so that's the error in cash control account because cash control account got to know about these balances only after receiving the bank statement. ළමයි මේවා bank statement එක හම්බුනාට පස්සේ තමයි මේගොල්ලෝ දැනගන්නේ. එහෙනම් bank statement එක හම්බ වෙනකම් මේවා record වෙලා නැහැ. You got to know about these informations only after receiving the bank statement. Until that, you never have been adjusted to it. So now this is the conclusion. If there is any error in cash control account, to rectify the errors, what we do is we recognize these things. They are cash control. We recognize these in cash control. Sorry, adjusted cash control. Adjusted cash control. That means these errors will be rectified in here. If you haven't recorded bank charges, we record. If you haven't recorded standing orders, you're supposed to record it. If you haven't recorded direct remittances, you're supposed to record. Because error in cash control account, so error should be rectified using the cash control account. Once we rectify it, it is called as adjusted cash control account. Then bank statement also having mainly two errors. One is unpresented checks. One is unpresented check. The other one is unrealized checks. So these bank statement errors should go for where? This should go for the bank reconciliation. I will tell you what are these. Right? So this is the conclusion. Practically, as well as in your exam, there would be a difference between cash control account balance and the bank statement balance. I will explain it later. So there would be differences between the cash control account balance and the bank statement balance. Once there is a difference between cash control account and the bank statement balance, you have to identify where the error is. So there could be the errors in cash control account. There could be the errors in bank statement. These are the examples of errors in cash control account. That means cash control account have not been recorded this. If they have not been recorded, error is in cash control. These are the things not recorded by cash control account. Then that error should be rectified using the adjusted cash control account. Clear? Then errors in bank statement. That means that's what they have not recorded. One is unpresented checks, the other one is unrealized checks. So those checks would go for bank reconciliation. So now you can see two types of errors should go for two destinations. Clear? So can you take down these reasons for difference between cash control account balance and bank statement balance? So take down these errors in cash control account, errors in bank statement. So let me know, is it clear? Is it clear, guys? Take down this. Any questions? Any questions? Few newcomers also. If they are the Veera that who was talking for me yesterday. Is there a student from that Veera that who talked to me on yesterday? No. All right. Okay, take down this soon. Done? Your message is done. Done, right? Shall I move on then? Now we'll see what's the unpresented and unrealized, because a lot of students they don't know what's the unpresented check and unrealized check. Right? Others, is it everything clear? Almas Begum, Apply Mias, Divisha, Fatima, Hasma Hilmi, Lasanvi, Prashad. Who are the newcomers today? Divisha, Lasanvi, Lasanvi was there. Right. Okay. So now, the next thing is I will tell you what's the unpresented check and unrealized check. Keep it in mind, error goes for the party who have not recorded. So that means these are not recorded by Dan statement. That's why the error goes for. Right? This is my bank statement. Debit, credit, bank. This is the cash controller. The cash controller. Right? Here the BBF is 200,000. Here the BBF is 200,000. We'll say you are going to pay rupees 10,000 electricity bill of check. 10,000. You send it for electricity. You gave this check for your best friend, Danushka. Right? He's the most trusted person in your life. We'll say this business is owned by the Kanchana. So Kanchana's most trusted person ever in her life is Danushka. So Kanchana gave 10,000 rupees check for Danushka. Can you deposit this can you do the payment for the electricity from this check? That's what was the request. So Kanchana gave the 10,000 rupees check payment gave the check for the payment for the electricity for Danushka, most trusted person that he has ever been meeting in her life. Danushka was one of her good friends from the preschool times and the most trusted person ever. So Kanchana didn't expect something else. She was wondering why the check was not gone for the bank. So this check was given for Danushka on January 25th. Then on that date, Danushka went for the bank. He went for his village, Akkarepattur. Danushka went for Akkarepattur, his village, with his check on 26th. He forgot to do the payment for this check. Right? He forgot to do this payment for electricity. With the check, he went for his village, Akkarepattur. Then all the connections were stopped between the Kanchana and Danushka. Then until the January 31st, Danushka didn't go for the bank to do the electricity bill payment. Now look here. Once we are issuing the check, Kanchana recorded it as a payment for electricity. Then he gives it for Danushka. Danushka, can you go for the bank and pay this check for electricity? But instead of going for the bank, Danushka went home Akkarepattur with this check. That means until the January 31st, Danushka didn't answer for the phone. Danushka's phone also switched off. So Danushka didn't go with this check for the bank. Clear? Now look here, January 21st, once you issuing the check, You credited it because Danushka was the most trusted person ever in the Kanchana's life, right? But the check was not gone for the bank for the payment. So at the end of the month, you balance off the cash account. To balance off the cash account, here comes 200,000, here comes the 200,000, then here the 190,000. This is the balance carried out. This is the balance carried out. Now your cash account, it says balance is 190,000. But look here, bank says, look here, don't lie, content. You're a hell of lies. Balance in the bank is 200,000. Now, the two parties agree to record the same transaction, but fortunately or unfortunately, you get two different balances. Fortunately or unfortunately, you get two different balances. What are the reasons for this balance? You issue the check for the payment, but it was not there, come for the bank. You send it for the payment, but not appeared in bank statement. Look here, this 10,000 is not appeared in bank statement. So if it is not appeared, that's the error in bank statement. We said who have not been recorded, that's the error that they get. So this is the error in bank statement. Clear? So now this is the error in bank statement, this 10,000, because cash control account nicely recorded. They didn't record this. Bank statement didn't record this, means it's error in bank statement. This is called as unpresented check. Unpresented check. How you recognize it as unpresented check? So if it is unpresented, not it is a check. Make a not appeared in bank statement. Check not appeared in bank. Now this check is not appeared in bank statement because Danushka didn't go for the bank for this payment. Danushka went home after a month with this check. He didn't go for the bank. So now it's not appeared in bank statement, this check. Now think, for what you send it the check? Is it to deposit or you send it for the payment? See, you send it for a payment. That's why credited. So if you send it for payment, that means it was a check for payment. If it was check for payment, then it is called it as what? Unpresented check. That means that check should not be appeared in bank statement. Obviously, not appeared in bank statement. Say right in bank statement. Check not appeared in bank statement. Right? But that check should be a payment for. It should be a check. You send it for payment. Check send for payment. If the check is sent for payment, if the check is sent for payment but not appeared in bank statement, it's called as unpresented check. See, this is sending for payment, not appeared in bank statement. This is unpresented check. Then the next one is could be happen the other way. We'll say you send this for the payment of electricity. The other check is you can send the check for deposit. Send the check for deposit. Now we are going to send the check for deposit. We'll say now Kanchana gives that another check. Kanchana's business received a check of rupees 50,000 on January 31st, early in the morning. So once you receive the check, cash debit, sales credit, exactly. Once you receive the check, cash debit, sales credit. Clear? Because you have received the check. Now on 31st, you send it for the bank. You give that check for your accountant, right? Your accountant Ramesh. So gives that check for Ramesh, and Ramesh didn't go for the bank again with his check. Again, he also went for the home, Mata Urubok. Right? So now he went for Mata with the check, not for bank. Now March 31st, once the bank is closed down their bank statement, is there appearing this check? No, because there was not that much of a check for them because check was with Ramesh and Ramesh with Madhav. Nothing to do. Right? So now you can see here, this is 50,000. You sent it for the bank, but Ramesh with that went home, Madhav. Now at the 31st March, 31st January, it's not there in bank statement. So now you say the balance is how much? 150,000, but bank says it's 200,000. You say 150,000, bank says 200,000. Clear? So now here it's also a difference is there. This is 150, this is 200. How the difference comes because of 50? Who didn't record this? See, bank statement, is it appeared 50,000? No. But you send this check for what? See, that difference. See, check not for appeared in bank statement. If it is sent it for payment, it's an unpresented check. This is what? You send it for payment, or basically if it is cash debit, you receive the check. That means you send it not for payment, it's for deposit. If you send the check for deposit and not appeared in bank statement, it is what? It is unrealized checks. Clear? Check not appeared in bank statement. If you send the check for payment, it's unpresented. See, the common thing between unpresented and unrealized is not appeared in bank statement. Whether it's unpresented or unrealized, it depends. If you send it for payment, it's unpresented. If you send it for deposit, it's unrealized. Clear? Right. Take down this for your book. This one, checks not appeared in bank statement. Check sent for payment. Right? If the check sent for payment, unpresented check. If send the check for deposit, it's unrealized. Take it. I didn't understood that question. Sales increase assets. Yeah. 50,000. Because we don't care about the bank statement. We have recorded cash control account, so we record this. Sales. We record this. Because bank statement provided by the bank, we don't care what they have recorded. If we have recorded, it's in accounts. Take down it. Done. Any questions? No questions. Right now, keep it in mind, errors in cash account control account should go for adjusted cash control account. Errors in bank statement goes for statement of financial position. Sorry, errors in bank statement goes for bank account. Right. So now the time is 11 o'clock. We'll take like 10 minutes break and we'll meet. Huh? Just 10 minutes. Huh? Now the time is 11. So you can have the breakfast or whatever if you didn't have it. So just have a something and come like 11:10. Huh? So the time is 11. So 11:10 is the time you're supposed to come. Huh? right? So we'll move to movements and all how it comes. Right? So now, first thing is, you all know, errors should go for two places. One is for adjusted cash control account, the other one is for bank reconciliation. Right? So, first one is, I will tell you how to get the adjusted cash control account balance. This is my adjusted cash control account. So, we'll say, cash control account balance is 200. Then the bank statement balance is rupees 100. Now this is the difference. So you take this cash control account balance. You take this cash control account balance as the opening balance. So BBF here, it should be how much? 200. Because this is the balance now appeared in there. This is the wrong balance. This is the incorrect balance. So this incorrect balance is supposed to be corrected. Now we'll say, what are the examples I have given for you? Bank charges. So if it is bank charges, cash decrease. So bank charges credit because from the bank charges cash decrease. So it's will say 1,000. Direct remittances. Direct remittances. We'll say it's 50,000. From the direct remittances, cash increase, so debit. Standing order, you supposed to pay electricity. We'll say once you pay for the electricity, cash decrease. So standing order comes to here. It's say 5,000. See? Then there is something called dishonored check. Right? So in the paper class that we'll get some questions on dishonored checks, but just for now, for the theoretical aspect, right? Dishonored checks. There are two types of dishonored checks now. Two types. Dishonored means you send the check for bank, but bank rejects the check. They don't accept the check. How come it's? You supposed to put the signature, but your grandpapa might be signing off for the signature in the check. Or your elder brother would have been signing off for the check. Then bank doesn't approve the check. They don't accept the check. It's required your check, not the others. Sorry, it's required your signature, not the other signature. Even we'll say you have given a signature like this, but you have sent a signature like this for the check. Bank don't accept it. If the check, the signature is different. If you don't have the balance in bank account, they don't accept the check. So dishonored means bank is not accepting the check. They would reject the check. Dishonored checks would be two. One is send for payment. Send for payment, right? The other one is send for deposit. Send for deposit. One is send for payment. One is send for payment, right? The other one is send for deposit. The other one is send for deposit. One is send for payment. The other one is send for deposit. Clear? So both these checks could be dishonored. We'll say you send it the electricity bill check, then it's a send for, it's a check sent for payment, then it could be dishonored. Then you could send a check for deposit, it could be dishonored. So the treatment for dishonored checks, it's depend on whether you send the check for a payment or based on whether you send the check for deposit. That's how it's based, right? Dishonored checks, it's depend on the treatment, right? Accounting treatment for dishonored check depend on whether you send it for payment. You have to first see whether you send it for payment or whether you send it for deposit. We'll say there is a check you send it for payment. There was a check that you send it for payment. We say electricity. Electricity. Once you send it for payment. Once you send it for payment. Once you send it for payment. Electricity. 5,000 will be. You send it for payment. So cash control account should be credited. Once you send it for payment, cash control account is credited. Because cash decreased, so guys. Cash will decrease. So cash control account is credited 5,000. Right? Cash control account was credited 5,000. Same like nothing. See? Now you send this for payment. See? Electricity bill you pay, send it for payment. Check is sent for a payment, not for deposit. Electricity expenses, so it's a payment. So now you send it for payment. Okay? You send it for payment. You send it for payment. If you send it for payment and dishonored, we say bank say okay, they can't accept the check because check the amount is not clear. So if this is dishonored means you have to eliminate it. You have to remove this transaction. Then cash control account should be what? Debited. Say dishonored. Clear? First thing is identify what was the initial entry. Check for the electricity, cash control account gets credited. Check for the electricity, cash control account gets credited. Clear? Check for the electricity, cash control account gets credited. 5,000, it was credited the cash control account. It was credited the cash control account, 5,000. For a payment. Now, if this was dishonored, guys, if this was dishonored, you send it for payment, then at that time you credit it. If it is dishonored, you have to eliminate it, so you have to debit it. So here debit is 5,000. Dishonored check, but you send it for within brackets put for payment. You send it for payment. Clear? Then we'll say this is send it for payment. What the treatment is? If it is send it for payment, debit for treatment is debit for cash control. That's the treatment. Debit for cash control. The next one is you send it for deposit. We'll say you send it for deposit 20,000 sales check. 20,000 check you send it for deposit. At that time, cash control account is debited because cash increase debit. 20,000 you send it for deposit. But bank didn't accept it. If the bank didn't accept, you can't keep debit because it's incorrect. Even you debit it, even you said cash increase, it's incorrect. Bank said they can't accept the check. So this increase should be eliminated, saying crediting 20,000. You're supposed to credit this 20,000. If it is deposit, first thing is debit it. It's debited once you deposit it. If it is dishonored, that means you have to eliminate this transaction. You have to reject this transaction, so credit it. Right? So here comes how much? 20,000. Saying what? 20,000. Saying the what it says. Dishonored check, but deposited. If it is deposited dishonored, it is deposited dishonored, then credit for cash control. Credit for cash control. Clear? So take down this also, dishonored checks. Then balance this off. 255,000. 255. Balance carried. Right? So take down this one, take down this and this also. Let's make up that form minus 26,000, 229,000. This is 229.
right? 229,000. I will give you 2 minutes. Take down this as well as this. I know I need some space to here to continue. So keep some space to continue this. Take down this for somewhere else. Done? Any questions so far? No questions, right? Is that so? So now this is adjusted cash control account. Next, what we are supposed to do is we supposed to have the bank reconciliation. We supposed to have the bank reconciliation. Bank reconciliation. Here you start the bank reconciliation from this balance. Now this is the balance you take it 229,000. So this is called as adjusted cash control account balance. How much is the adjusted cash control account balance? It's 229,000. Right? So if you use the adjusted cash control account balance to here, you have to add what? Unpresented checks. You have to add the unpresented checks. We'll say unpresented checks is 50,000. So now the total is 279,000. Then you subtract what? Unrealized checks. We'll say it's 20,000. So then finally the answer, some students write down balance as per bank reconciliation is completely incorrect. This is what? Balance as per bank statement. Balance as per bank statement. How much is it? 259. That means with our correction, cash control account 229, but still bank statement showing a balance of 259. So if you use the adjusted cash control to here, you are done presented, subtract unrealized. Clear? Take it out.
Right? Done? Any questions so far? Is everything clear? Huh? Is it clear? The Maravilla guy? Is it clear? Right. Okay. So this is the bank reconciliation. This is method one. This is method one. Then there is another way of preparing the bank reconciliation. Last time bank reconciliation was amalgamated with non for profit. So not a big deal if you know this format. මේ format එක දන්නවනම් මේ ගේමක් නැහැ. ලොකුවට කතා කරන දේවල් නැහැ. Now here see you started this question, this reconciliation. Here you started this reconciliation using adjusted cash control account balance. You started using adjusted cash control account balance. Yeah, it's a random value. Saruk Kannankar, it's a random value. I just said it, right? So now I just said it, amounts like way. So now now see you started the reconciliation from adjusted cash control account, but then reconciliation method 2, how it comes is you take first here balance as per what? Bank statement. Balance as per bank statement. You take it to here balance as per bank statement. Now look here. How much is the bank statement balance? That means it's upside down. Not the adjusted cash control account you are going to take. You are going to take balance as per bank statement. Balance as per bank statement is how much? 259. Then you add what? Unpresented checks. You add the, sorry. Now look here. We have the upside down. Get the upside down. Started from what? Bank statement. Here we add what? Unpresented. But we add unpresented since we use adjusted. But if you use the bank statement balance, we add unrealized check upside down. So you would take the unrealized checks too. Then how much is unrealized checks? 20,000. We add back the 20,000 unrealized checks. Then total is 279,000. Then we have to subtract unpresented checks. And earlier it was plus the unpresented because it was used adjusted cash control account. But we use the balance as per bank statement. Once you use the balance as per bank statement upside down, you plus unrealized checks. Then minus the unpresented. It's 50,000 subtract. Right? Then this is 229,000. So this is balance as per 229,000. Here, look here the difference. Here you started from adjusted and came to bank statement. Here you start from bank statement and here came to cash control. So balance as per adjusted cash control account balance. 229,000. Look here, 200. See, this is we started from bank statement and you come for the adjusted cash control account balance. It's 229,000. See, adjusted cash control account balance 229. That's the method 2. That means keep it in mind. If you want to calculate the adjusted cash control account, this is the cash balance recognized in
recognized under current assets in Excel. That means our current assets cash balance should be the adjusted cash control account balance. But guys, look here. Don't try to listen to me. This is the balance you have to take it for adjust for the current assets, cash and cash equivalent for historicity. Now see, the same amount can be derived. This has been already tested in exam. The same adjusted cash control account can be calculated using two methods. One is straight away you can prepare the adjusted cash control account. Straight away you can prepare the adjusted cash control account. Or else you can prepare what? Bank reconciliation, which is starting from balance as per bank statement, then you get the adjusted cash control account. Clear? Right? This is balance as per bank statement. Then you add unrealized minus unpresented, the upside down, then you get adjusted. Look here, don't write it down. Look here, give me 1 minute, brother. What I want to emphasize is two things. Adjusted cash control account is the balance you take it for cash in SOFP. Current assets should be adjusted cash control account balance. Then the other one is adjusted cash control account balance could be found in either adjusted cash control account or using method 2, this one, reconciliation. Clear? Take down the second one also. Second one and this one. Take down this point as well as this method 2. Take down this point, put a star mark and write it down this point, and take down this format also, the method 2. And any questions, let me know. That shall I clean this thing? Can you all take the past paper books? Can you all take the past paper books? Paper is 2012. I would first select the MCQ question. 2012. To come for this program, past paper book is must. 2012. Question number 10.
2012, question number 10. Try for that question. And let me know your answers. Share your answers in chat box. Number 1 or number 2 or number 3 or whatever. Uh, 2012 A-level question number 10, MCQ. 2012 MCQ question number 10. Okay, others also tried. Before that, if you want a help tip, now look here. What I want to tell you is there are two balances basically. Cash control account, it's a what asset? No? Cash control account, it's a asset. Asset increase debit. So if it's in cash control account, debit balance, it's a what? Favorable balance. It's a favorable balance. Doesn't matter, you can use the amount and go, no need to put brackets or something. Then bank statement, look here. Cash control debit means bank statement credit balance. Bank statement credit balance, it's a favorable balance. Clear? No need to put brackets. No need to put brackets. Cash control debit balance means it's a favorable balance. If it is cash control debit, bank statement favorable balance is credit. If the bank statement is credit, that is favorable. If the cash control account gets a credit balance, then it's a bank overdraft. Then it's a bank overdraft. Cash control account credit balance. Then bank statement, it's a which balance? Debit balance. Then it's a overdraft. If it is overdraft, should put brackets. That's all. For the bank statement, you should put brackets. Huh? Only for the bank statement. Whenever you take bank statement, if they say it's a debit balance, it's overdraft, so should brackets. Here, take down this. That overdraft is a liability. Can you argue no cash is there, you're supposed to pay. Somebody know that cash control account debit, favorable balance, bank statement credit balance, favorable balance. Doesn't matter as it is. Then cash control account credit, overdraft, bank statement debit, it's over. Right? If it is Overdraft bank statement balance always should reflect from brackets. Right? Now try the others also. If it is favorable, this thing doesn't matter. You can keep doing the numbers as it is. No need of formula. Everyone is supposed to try it. Huh? I will give you 1 minute now. Done. Right. So now look here. What is this? You see what it asked? The entity carries out all cash transactions through a bank account. Its monthly bank statement shows it a credit balance. Now see, bank statement, it's a credit balance. So it's a favorable balance. Doesn't matter. Right? On this day, checks deposited but not realized, checks not presented for payments for 85,000 and 45,000 respectively. The bank balance in the books of the entity. ළමයි එකකට මම ඉතින් ගොඩක් අය වරදින හේතුව ඒක වෙන්නේ I should tell it for you. Just make it the bank balance නෙමෙයි. Make it remove the bank, put it the cash adjusted cash control account balance. Not the bank balance. I forgot to tell you. Now it's not in use that we don't use the bank account. So question should be changed. The cash control account balance. Question should be changed. Cash control account balance. That means adjusted. Put adjusted cash control account balance. Now look here. If you all can remember, adjusted cash control account balance can be calculated using two methods. One is using adjusted cash control account. Adjusted cash control account balance can be calculated using adjusted cash control account basically. The second approach is using bank reconciliation. Using bank reconciliation. Right? Using bank reconciliation. Method 2. So for this question, adjusted cash control account balance can be calculated not using number 1, using number 2. Why number 1? Have they given you the bank charges? No. Have they given you opening balance of cash control account? No. Nothing they have given for you. There is nothing that they have given for you. Then you supposed to take the adjusted cash control account using bank reconciliation method 2. What was the method 2? Bank statement balance. How much was the bank statement balance, guys? 270,000. 70,000. You might be wondering, so look here, do I want to put brackets? No, why? Bank statement credit balance means favorable. Because bank statement credit means liability is credit. That should be the amount. Right? Bank statement balance. Balance for bank statement. If you use the bank statement, look here. If it is bank statement you use, you get what? Unrealized. You get unrealized and subtract unpresented. Now see, what are the checks that they have given for you? Checks deposited but not realized is how much? 85,000. Not realized is 85,000. Then they say what? Not presented for payment 45,000. So unpresented you have to subtract. This is how much? Then this is 310,000. This balance is called it as adjusted cash control account balance. Change is not the bank account, it should be adjusted cash control account balance. Sorry, I forgot to tell you. Clear? So adjusted cash control account balance, you can't calculate this question from here, it's the method 2. Clear? If you want, you can take it down. I will give you like 2 minutes. Is it clear why it's not the 230,000? Is it clear? The students who say 230, is it clear how comes to 310? Clear, right? Any questions? Let me know. Is it clear, Fatima, how it comes? 310, not 230. Then Rukaya Ramesh, is it clear how comes 310, not 230? The other one who said 230? Rukaya Ramesh, right? Is it clear? Alright, you said again 4, fine. Right. So that's how it comes, huh? Right. Then can you all come for? Now keep it in mind, whenever bank statement say debit balance, that balance should be overdraft, then debit balance should be put bracket. So debit ke lage bracket hai. Next question, come for 2012 A level. Question number 2, question number 3A. 2012, question number 3A. Question number 3A. Then do these changes, please. It says the cash book of a business showed a debit, not bank balance. Remove the, here it's bank balance, it says, not the bank, says cash control account. Cash control account balance, right? So it should be the cash book of a business showed a cash control account balance of 20,000 as at 31st March 2012. On this date, the bank statement showed a overdrawn balance. Overdrawn means overdraft balance. Huh? The subsequent investigation revealed the following. Right. Checks bank account. Right. Do the first one and the second one now. Have a try. Get the adjusted cash control account. See, adjusted cash control account. How much is the opening balance they do say? The cash book of a business showed a, I said, make it cash control account balance. Debit balance, debit cash control account balance is 20,000. So here BBF 20,000 and do the adjustments for the adjusted cash control account. Take that balance and go for the bank reconciliation method 1. And go for the bank reconciliation method 1. And go for the bank reconciliation method 1. Once you done, let me know. In here you take the adjusted cash control account. Start it. Once you done, let me know. Is it 30,000 to 30,000? Adjusted cash control account balance. Use it 30,000 after adjusting the errors, no? Alright. Others also starting and do it. Once you done, please Let me know you have done it. Yeah? Just put that. Fine. Any questions? Let me know. I'm here. Any questions that didn't understood this, you can ask from me. Okay. Others also just have a try for this question, please. Any questions? Let me know. Don't keep the questions with you. We'll be doing more questions when we start the paper class. February first week, I'll be starting the paper class also. Any questions? Don't keep it with you. Please ask from me. Or just put a message. A lot of students they ask it. Doesn't matter. I just want to see that you all try it. That means for the adjusted, right? Adjusted, there are some suggestions for 30,000. We'll see. Okay, go ahead. Fatima, any questions? Okay. Dilshan? Asma Hilmi? Last time this bank reconciliation was amalgamated for non-for-profit. Right. I will give another 1 minute. So nowadays there is no separate question from bank reconciliation. It's amalgamated for somewhere. Up to 19, it was amalgamated for accounting equation, and some of it could be for partnerships also sometimes, even for companies, right?
Now look here, adjusted cash control account balance is 20,000. Then here I decided to take adjusted cash control account balance. If you take adjusted cash control account balance to here, V plus what? Unpresented checks. We plus the unpresented checks. Then we subtract the unrealized checks. Unrealized checks. Now what it says? Checks deposited in the bank amount to 80,000 have not been realized. This is unrealized 80,000 to be here. The next one is check issued to supplier 40,000 have been presented to the bank, not been presented. So this is unpresented. You add 40,000 to here. Add 40,000 to here. It's unpresented. Clear? Then interest on fixed deposit 25,000 directly remitted to the bank has not been recorded in cash book. So direct remittances, interest income. So 25,000 to here, say interest income. Doesn't matter if you have put direct remittances, but make sure this is debited 25,000. That means interest income credit 25,000. Double entry is there. Cash control debit 25,000, interest income credit 25,000. Next, a payment 5,000 made by the bank and insurance premium on the standing order has not been recorded in the bank. So 5,000 to get standing order. Credit. Next one is a check rupees 10,000 deposited in the bank has been dishonored. Look here, dishonored. I told you once it says dishonored, be careful. Accounting treatment is based on whether it's a check you send it for payment, whether the check is sent it for deposit. This is a check that you send it for deposit. Once you send it for deposit, you would have what? Debit receipt. Once you send it for deposit means that we receive check. Once you receiving the check, it's debit. But if it is dishonored, check received or deposited is debit. But it's dishonored, so then to eliminate this, this should be credited what? Dishonored checks. Checks 10,000. Clear? Then here is how much? 45,000. Here 45,000. Then here the answer is 30,000, which is VP. 30,000. Here comes 30,000. Then it's 70,000. Minus 80,000 means minus is higher than plus. So here bracket 70,000. This is balance as per what? Bank statement. Just see in the question it says overdraft balance is, overdrawn balance is 10,000. So that's what it's there. See, whenever there is overdraft, it's bracket. Is it clear? So that's how it comes. Right? That was the last time it was tested as a 30,000. Here, here is the debit balance, BBF. So no need to bracket this one because BBF is in debit side. No need to put brackets. Clear? Balance as per bank statement 10,000. Is it clear? So that was the last time they tested this. Right? Another few questions will be discussed in paper class also, and this is the homework for you. So important. Next week I will be starting. Before I go for the primary books, I will discuss this question. Homework is 2013 A level. Question number 3. 2014 A level. Question number 3. I want these in Tuesday. 2014 also. Question number 3. If you have any questions, once you are doing the question, you can talk to me. If you want, you can check the answers also and see how it has been calculated. I just want to see that you are trying for this. That's all the ultimate objective. Right? So these are the homework. 2013 A level question number 3, 2014 A level question number 3. Yeah, we'll say there should be any changes. The bank reconciliation part also they are in both of these questions. And okay. Come for 2013 question number 3.
Can you all come to 2013, question number 3? 2013, question number 3. 2013 level, question number 3. Come for additional information, Roman number 4. Come for additional information, Roman number 4. Yeah, today I will finish at this time. How the math, right? 2013, question number 3, additional information 4. It says provision for doubtful debts. Remove the word doubtful debts and make it impairment loss. So should be not provision for doubtful debts, it should be provision for impairment loss. It should be provision for impairment loss. Students who didn't watch the accounting equation can watch in the YouTube video last week record. Right? Provision for impairment. Then can you come for the required one? Assets, the table having motor vehicles, furniture and fittings, debtors, then please note the bank, make it cash. Make it cash. Right? The table bank column should be make it as cash. Clear? Right? Yeah, you can make it, Fatima. Yeah, you can use that MCQ question. That's what we did now. The only thing is, if you use bank statement, we as not unpresented, we as unrealized. Then we minus unpresented. Doesn't matter. Clear? If you use bank statement, you have plus unrealized. Is it clear, Fatima? Right. Come for 2014. Question number 3. 2014, question number 3. Roman number 2 under the additional information, and that column also not bank. I said they are furniture, inventories, debtors, bank, not bank. It should be cash. Bank column should be converted for cash. 2014 also. Bank, remove it, take cash. Right? Then Roman number 2. What it says? Make it the not bank balance. Not bank balance. It should be cash control account balance. Roman number 2, not bank balance, it should be the cash control account balance. That's all. So you can try for that. So you can try for that. So we have 2 questions to do at the home, 13 and 14. Right? Then once I start the paper class also, I will get some more questions. So February we'll do the first 2 weeks for the bank reconciliation and accounting equation. Right? Any questions? Any unclear areas? Any doubts? Anything to discuss more? Any questions? Charu Khan, is it he there? No. Right. So do this work, right? So don't expect that you can do the accounting without doing these certain stuff. So make sure you do these things, you do more homework. If you want, you can refer 2015, 16, doesn't matter. I don't mind that. Right? So all the past papers now you can do it. But keep the 2019 and 20 for me, yeah. And any question, just put a message and tell you how to do that adjustment. So you yourself try it. 13, 14, then it's homework. So don't consider 13, 14 only the homework. Why don't you do the 15, 16 also? You can do the 17, 18. Right? You just have a try. Right? So we'll see how it's going. So that's the plan, right? So shall we wind up the session then? Right? So we'll meet on the next week. So what I was telling for you all last Sunday, I asked you all to go through with the other homeworks also, like other past papers also. Then Once you done these questions, nothing the yellow take. Right? I think everything is clear for Muktara, Prashad, Dilsha, Aflar, and all also. Huh? Okay, have a great day. Right, we'll wind up the session then. Huh? We'll meet on this Tuesday.